Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Woohoo, party. Let's see if YouTube's doing everyone. Its thing. And it is. Great to see. So, we had a nice sort of election recap session here for the good people at TRI today on our Daily Brief. And we also had a nice little segment by Kevin today. He showed us a whole bunch of stuff he's looking at. Excuse me, long day. Obviously, election uncertainties kept us awake late into the evening. And frankly speaking, I still don't think they have an official winner. If anything, I think probably the official winner from this election was capitalism. I get the distinct impression that the American populace, electoral public, basically told the socialists to go to hell. And interesting in the marketplace, right? The marketplace, the final arbiter, you can really see that in things like the healthcare sector, which I get the distinct impression that Obamacare and all that sort of wonderfulness about socialized medicine and all that and helping out the poor, I get the impression that the American public said, fuck you. Bang! And you can see the healthcare stocks, they liked what they saw overnight, because keep in mind, these companies are in this to make money. And their profit margins are nice and comfortably secured based on what I saw out of the election last night. Also, too, sort of another message of that, to hell with you socialists, the bond market violently reversed right through the get-go. In fact, I was actually putting tweets out yesterday going, holy Jesus, these bonds, right out of the gate last night before the polls actually came in, they were just collapsing. And the bonds just had the most incredible upside key reversal through that event. So huge message from the bond market. They are super happy that the socialists have been told to go to hell. And, it makes sense, right? Because in essence, there's that bond market key reversal. If the socialists had come all piling into power, blue wave, all that kind of talk, then that would have meant a whole shitload of new U.S. debt supply. And I think the bond market people were kind of like groaning, thinking about all that supply hitting the market. And that key reversal alone is going to put the bears on hold. It'll be interesting to see if this can hold through the rest of the day, because another big message, kind of like what I pointed out with the healthcare sector there, huge message I'm getting here today is risk on. So, I had sort of conjectured that, if the blues, the Democrats had come storming into power, taxes were going to go skyrocketing up. You're probably going to find massive capital coming out of the markets. And I get the distinct impression that everybody just went, whoa, that's not going to happen. And business as usual. So I've got a fun little risk on, risk off chart. Here we go. So interesting. I'm not really an oil fan, but not a big surprise to see it jump up. And Mr. Commentator, when I did that free video on the weekend saying you should just buy oil, I guess he's feeling pretty good right now, so way to go, nice call. Not really the kind of market I would touch with a 10-foot pole. Bitcoin, Bitcoin! Ironically enough, I actually look at Bitcoin, kind of looked at the election last night and went, so what? Same old bullshit. Turn those printing presses back on. But interesting to see, here's those stocks sort of busting that top, kind of like think of this as the socialist top. We were kind of conjecturing there over the weekend going, is the market going to start smiling at us? Uh-oh, goodness. And nope, dodged a bullet. Whew. Do we rally back up into these topping areas and the bears come in here? Believe it or not, if we get a nice little inside bar tomorrow, I told the community today, I might just hit that, just so it'd be forewarned. But the sort of short term, like the puking out, the market is dumping because the socialists are coming to take over, capitalism is over, that's off the table completely now. I'm wondering whether we're going to get another one of these funny sort of, the market tanks about a week before the celestial event, then rallies up, and then through the celestial event, we kind of go sideways and then come out the other side bullish, right? That's how it happened last two times. There's the April event, same thing. There's the June-July event, same thing. So I wouldn't be surprised to see that, folks. Don't be shocked. Also, too, of course, we got this big Jupiter-Saturn event coming out here on December 21st. Bang! I wouldn't be surprised if risk actually peaks into that event. And your gold rallies and peaks into that event. Bitcoin rallies, peaks into that event. The whole thing. Sure feels that way. Anyway, we'll see what happens. As I said, if we do start seeing some signs of failure here out of risk tomorrow, I might just go hit it. We'll see how it goes. See what the charts look like. All right, so back to our conversation. Out of the gate yesterday, huge rally in the U.S. dollar index. Actually took out the fractal top peak, and then we settled back down here. Is this now? Maybe, ironically enough, from a day-to-day basis, actually, it's not really a hell of a lot of change. If we change that to a line chart, the end result of today is really not much. But I do like this idea that risk is coming back into the market, especially the way this is melting back down here. Do I have any really clear direction out of this right now? No. And again, I like the idea. Let's throw the reference on here. I like the idea that the market ultimately pivots through this December 21st event. So could this actually be sort of like the left-hand side of a massive fractal bottom that forms here? Could be. So we're watching with bated breath. What I do find fascinating here through all this, risk on, huge rally. Even the oil, big jump, risk on. Fascinating to see the risk off bonds. They loved what they heard last night. But, interesting, our gold stopped on a dime. And we'd kind of talked about this. Could gold get going? But, I get the impression, interesting disconnect we've seen in the gold and the bonds of late. I've talked about this a bit, how the risk offs are kind of acting odd here. And I get the impression from the gold market that they're kind of disappointed. Because think about it in simplest terms. If the blue wave had caught and the bond market is collapsing, tons of supply, then that's dilution of the currency. And gold, of course, that's inflationary. Gold can get going. But with the bond market going, we don't have to worry about a flood of supply coming. That's not inflationary. And so you're actually seeing the gold come off here. Fascinating. And, I think we've said recently we wanted to watch the gold stocks in particular just to see how they were going to act up here. And we actually had potential setups coming on things like Agnico Eagle, which is was trying to form a breakout here. But as you can see, there's just no follow-through buying here today at all from the gold stocks. So, one low, two lows. Maybe now we're going to get our third low and we can watch for that pivot. But it's not here today. And like I said, the message I'm getting out of the market is risk on, right? Rawr, I'm a risk oner. And NASDAQ's going crazy. Risk on. Buy your stocks. Where's the NASDAQ? It's interesting. We were looking at the NASDAQ stocks with Kevin, and we even pulled up things like Facebook and stuff like that. They got some cheeky gaps right up top of their range. So be careful. I would still say that we're very rangy here. But like we said there about the S&Ps, the big worry was the socialists going to come piling in? And we never got that market is smiling at you signal. So right now we are still, in fact, basically we're in a consolidation range right now here. And probably not a heck of a lot to do until this thing sort of loses its steam. Got a cute little 3-bar fractal that came in. We talked a little bit recently about the trap, I think, that was laid there. Remember, people who wanted to sell ahead of the election, they had to sell on Friday, and then some funny business around that options expiry on Friday, and then boom, right? And this looks like a total classic short squeeze right now. In fact, actually, we were listening to Hogue this morning, and he was talking about how the open interest was collapsing on these futures contracts. And if you have the open interest collapsing and you have the stock market and the market's rallying, doesn't matter what market it is, that is a classic tell of a short squeeze. Shorts are being squeezed out of their positions and open interest is collapsing. So, yet another anecdote of just really a range market for now. There's that crazy-ass bond market key reversal, man. That was huge yesterday. I gotta say, that was the one thing that jumped out at me out of that election last night was like, wow, holy free holies. All right, so interestingly enough, I don't think that the buying pressure has translated into the speculative part of the stock market yet. Our little Russell 2000 versus the Dow still down, and a lot of our junior stocks are just sort of floundering around. They're not rallying like the mega Fs and like those pharma names and stuff here. So still a little bit weak on this sort of broader market, and our breadth indicator on the site kind of attests to that. This is not an image of a rip-roaring bull, right? If NASDAQ can come up, rally into that window, we go sideways a bit, Russell 2000 stocks, they start bottoming out, then we can get these indicators to turn back to the bull side. But right now, this is nothing more than like a dead cat bounce within the indicators being very, very far apart. Again, that sort of NASDAQ short squeeze kind of thinking. I like that thinking right now. And of course, we don't know who the hell is going to win this damn White House, so that could go back and forth here at least half a dozen times over the next few days. That's probably going to dominate what happens here. And for now, in the stock market, we're just range bound. As for crypto, I think the prevailing message of late remains. Shitcoins still in the doldrums and really probably into tax loss selling into year ends. Probably going to remain that way. You'll probably see some dead cat bounces along the way. Good old corn, Bitcoin, continues to work its way higher. Did see earlier this morning, been following, of course, this GAN study. Were we going to leave teal and enter orange? Still stuck in teal. Can't really get going, but I'll tell you, new fog and bombs came in yesterday. I put out tweets like, holy shit, you couldn't set this rally up any better. But it just looks to me like a GAN angle just sort of stopped that rally. But we made another new high. What do they say about show me a new high and I'll show you something? And I got 3 foggies up here. One foggy off of this double bottom, one foggy off of this double bottom. Which I guess is sort of like there to there to there. Mind you, that's not really the best one. But nonetheless, confluence. 200% range extension of this range up top here. Then a foggy off of this double bottom up here. I mean, I've said it before. I don't think it's in anybody's best interest to step in front of this thing right just yet. And I wouldn't, if anything, I'm kind of happy that the election turned out to be a big, who cares? So let's just keep bumping along here, continue to backfill, continue to make higher highs and higher lows, and then we can get our big blow off top here up top. I don't see any reason why that can't happen. Our weekly thesis, if you will, has been things like Gartley. And really, that's everything into that December 21st. It looks like it's still right on schedule. And that's sort of like this thinking. I mean, I don't know where the top is. Turns out 3 drives wasn't the top. Coming into an A, B, C, D and a shark next. And then there's that Gartley way up top there. So somewhere in here, and I don't think it's in anybody's best interest to step in front of this thing just yet. Just let it do its thing. Probably the one good thing for broader crypto space, starting to hear some talk out of Ethereum. So maybe the Bitcoin dominance conversation has sort of stalled out here a bit. We'll see. Only time will tell. When I look at Ethereum right now, go look up Mr. Vitalik's tweets this morning about 2.0. There's that double bottom. It's sort of working its way. We're coming up into reload zones up here. So we'll keep a close eye on how we act up against this wick right in here. And whether they really do want to have this as a top. If they do, then we probably see pop up top, inside bars, on divergences, maybe even an M, and then I'll think about going and buying puts. Right now, just hurry up and cool your jets. Okay, well, there's your summary. Hope you enjoyed that. Hope I gave something of value to you for you to consider. Great to now see that this huge political unknown that we were worried about is behind us. Now it's just simply collecting the end results and declaring the winner. Really not that big of a deal. I think the biggest thing coming out of that event last night was I was worried sick that we were going to head into some sort of socialist, nationalize, outlaw ownership of crypto, that kind of market. And I just don't see that now. I see that capitalism is perfectly well entrenched. And it's just more of a business as usual kind of environment. So slow and steady wins the race. Don't take no wooden nickels. PMA for the win. All the best. And bye for now.